Well, joining me now is Magnus Cattan. He's the head of ICE Data Services in the Asia Pacific region for Intercontinental Exchange. Magnus, it's great to have you on the show and welcome.
Thank you. Thanks for having me here in this iconic building.
Yes, wonderful to have you here at the New York Stock Exchange. And to start, Magnus, could you paint a broad picture of the ETF landscape across Asia Pacific?
Sure. So Asia Pacific is the third largest ETF market by AUM after the US and Europe. Asia's got about 1.2 trillion in assets under management in US dollar terms. Compare that to the US, which is about 10 trillion US dollars. So there's still quite a big gap between Asia and the US. That said, when you look at AUM growth and you look at flows, Asia Pacific is growing much faster than the other two regions. And according to PwC, they think that by 2028, the AUM in Asia Pacific is going to reach 3 trillion US dollars and be about the same size as Europe. Now, in terms of countries, Japan's the largest ETF market, followed by China. Equities is still the big theme across Asia Pacific. If you look at markets like China, Hong Kong, Japan, and Australia, AUM can be anywhere from over 75% to over 90% of market share. However, with rising interest rates, you've got fixed income becoming more attractive, and certainly that's been a driver of new product growth and innovation. And here, fixed income, your US Treasury ETFs are probably the most popular. And at a market level, Taiwan is the biggest bond ETF market by AUM terms. It's roughly about half of the AUM in Taiwan is in fixed income ETFs, making it the fifth largest bond market ETF globally as well. So if I look at for ICE across Asia Pacific, we've seen tremendous growth across equities, across thematic, and across bond ETFs. In fact, in 2024, the AUM tracking our indices grew by over 80%.
Now, what kind of geographic drivers, Magnus, are you seeing in terms of market expansion?
So, I mean, it's interesting. After 14 years of pumping more than 70 trillion yen into ETFs in Japan, the Bank of Japan in March 2024 announced that it was going to stop purchasing ETFs. So we've seen in Japan a fairly muted or flat growth in equity ETFs, domestic equity ETFs during the course of 2024. However, foreign equity and foreign bond ETFs have shown pretty good growth. And what's interesting there is that most of that money has been coming from retail flows rather than institutional flows. And in fact, I think it's interesting, if you look at Japan, over 50% of the retail assets sit in cash deposits. The government is absolutely determined to convert this cash into products, and ETFs should benefit from this. In the medium term, we should see pretty good growth in ETFs in Japan as well.
We have a lot of markets, of course. I know that Intercontinental Exchange does focus on Magnus. Thematic indexes certainly are popular. What themes are you seeing an appetite for there?
I think any themes that transform economies are going to be of popular interest to a lot of investors. So things around technology, things around AI, things around semiconductors, for sure, are popular themes. And it's worth keeping in mind that markets like Taiwan, Korea, Japan, and China are home to the largest semiconductor companies in the world. So that's certainly going to be a popular theme, or continue to be a popular theme for the future. I think also fixed income ETFs are going to be a popular theme as well. So I think in terms of anything that transform economies, like AI, thematic, and semiconductor will be popular. And really, it's retail money that's driving that. So thematic indices and ETFs really are being driven out of Taiwan and Korea, where you see almost 50% of the assets under management coming from retail flows.
Magnus Cattan, he's the head of ICE Data Services in the Asia Pacific region. Magnus, so great to have you here at the Stock Exchange. Thank you.
Thanks for having me.